You know what they say about the calm before the storm? This week's bond market looked like watching paint dry until you realize we're sitting on a powder keg heading into next week. While everyone's calling it a boring week, there's a much bigger story unfolding that could completely reshape the rate environment. Hey everyone, this is Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. This week gave us some fascinating market action that most people completely missed. Friday's retail sales came in exactly as expected, 0.5% headline, core even stronger. This should have been terrible news for the bonds. Strong consumer spending typically means the Fed stays hawkish. But here's the puzzle. The 10-year barely moved. We're still range bound between 4.33 resistance and 4.11 support. Why? Because smart money is looking past current consumer strength to what's happening underneath the surface. The real story? This week's PPI data revealed the real picture. We're seeing what economists call the tariff hot potato. Costs getting passed down the supply chain like a game of musical chairs. Producer prices for trade services jumped 2% month over month, the biggest increase in 3 years. That's wholesalers and retailers finally passing those tariff costs to consumers. But even after this inflation spike, the market still priced in 93% odds of September cuts. That tells you everything about where the smart money thinks this is heading. The technical setup, we're sitting right on key technical levels. Mortgage bonds at 100.13, testing that floor of support I've been watching. The 10-year holding its established range. Oil continues weakening below $64. Industrial metals reflecting global slowdown, both giving the Fed room to maneuver. If we break below 4.22 on the 10-year, that builds momentum toward my 4.11 target. But 4.33 remains critical resistance if we get surprises. The week ahead, Jackson Hole's significance. Next week is absolutely critical, and here's why Jackson Hole matters so much. This isn't just another Fed meeting. Jackson Hole has historically been the platform where the Fed telegraphs major policy shifts. Think about it. This is where Bernanke announced QE2, where Yellen signaled the end of zero rates, where Powell laid out his inflation framework. But this year, there's an added dimension most people are missing. The Alaska summit happening simultaneously could produce Russia-US economic agreements that completely change the global landscape. This reminds me of January 1991, when Secretary Baker walked out of that final meeting before the Gulf War and said, regrettably, oil spiked 12%. But when the war actually started and we won decisively, oil dropped 30%, and the 10-year yield swung 30 basis points in just 3 weeks. Here's what to watch. Tuesday, housing data with building permits as the leading indicator. Wednesday, FOMC meeting minutes at 2 p.m., then Jackson Hole officially begins. Friday at 10 a.m., Powell's keynote speech. Every word will be analyzed for September cut signals. Multiple Fed speakers throughout the week will give us the complete picture, but Powell's Friday speech is the main event that could reshape market expectations. The tools for this environment. This volatility creates real opportunities, which is why I'm sharing 3 key tools this week. Rate down versus buy down presentation. Critical analysis for helping clients understand their real options in this rate environment versus waiting for cuts. The Second Look Advantage program, perfect for reviewing existing pre-approvals to find opportunities the first lender might have missed. Complete economic reports, the same market intelligence I use, available to help you educate clients and referral partners. While everyone's paralyzed by uncertainty, the challenging files are where we make money. Suitability beats eligibility every time. Bottom line, look, I've been doing this since 1983. The biggest opportunities come when everyone else is frozen by uncertainty. Right now, we've got potential Fed easing, possible geopolitical developments, and a market that's positioning for change. Strategy beats rate always. Focus on household blended interest rates and cash flow impact, not just that mortgage number. For complete market insights, check out ronsiegelradio.com. If you've got challenging files that need strategic solutions, book a discovery call with us, bookrs15.com. That's bookrs15.com. Next week could be the inflection point we've been waiting for. Have a great weekend.